Hello and thanks for joining me today. This video is about using divergence with the relative strength index, the RSI. So in this video, we're going to explain what we mean by divergence and how it can be used as a signal to potentially identify market reversals. We'll also look at some actual real-world charts to give you some examples of what we mean. And do stick around to the end of the video because we're going to talk about putting everything we've learned about the RSI together into one unified theory for working with that oscillator. If you haven't already, it might be worth checking out my two previous videos on the RSI. One introduces the oscillator and the other one was about failure swings with the RSI. Hello, I'm Peter Martin with Trading 212, and we add educational videos about the financial markets, about investing and trading to YouTube on a regular basis. You can subscribe to our channel by clicking on the red subscribe button. It's well worth your while because it's a really easy way to find out whenever we've added new videos. Well, in the previous video, we talked about failure swings, one of several ways of interpreting the RSI, the relative strength index. This video, we're going to look at another way of interpreting that oscillator, and that's what we call divergence. It's a really useful general concept to understand, and it can be applied to some other oscillators as well, so well worth learning about. So let's take a look now at divergence. First of all, what do we mean then by divergence? Well, in the context of an oscillator, divergence is whenever there is disagreement between what we're seeing in terms of price action and what we're seeing from the oscillator, in this case that we're talking about, the RSI. And divergence therefore occurs when either you see the RSI increasing and price movement is either flat or decreasing, or when you see the RSI decreasing and price movement is either flat or increasing. And I suppose we should also be asking, what's the point of divergence? What does it signify? Why should you care? Well, when we see divergence, the theory is that it indicates the possibility of a turning point. Now, it's worth noting that it doesn't happen at every turning point, though. In other words, sometimes you will have tops and bottoms where there is no divergence. But the thinking is that seeing divergence occur is an indication of the likelihood of a turning point. So let's run through instances of divergence just to reiterate what we've just said. If you see price going up and you see the RSI or your oscillator going down, that's a case of divergence. If you see the price going down, you see the RSI going up, it's doing the opposite thing, that's a case of divergence. If you see price sort of moving sideways, flattish, and you see the RSI rising, that's divergence. If you see price movement as flattish and you see the RSI dipping, that's divergence. And perhaps stating the obvious here, but just to make it clear, the following would be a summary of instances that aren't cases of divergence. In a nutshell, if price and your oscillator are doing the same thing, then it's not divergence. So if you saw price rising and you saw the RSI also rising, that wouldn't be divergence. If price fell whilst the RSI was falling, that wouldn't be divergence. And if price was flat and the RSI was also flat, once again, they're doing the same thing, so that wouldn't be divergence. And just to try and make this even clearer, let's run through a divergence example. And this is a representation of a price chart with the RSI oscillator beneath it. So we've got price and the RSI. This is just figurative, but if you did see this going on, then here, let's call this point A. If we look at the price movement at point A, then price is ascending. But if we follow the same point down, at point A, our oscillator has begun to decline. So this is a case of divergence. Similarly, if we look at this point here, let's call this point B, we can see that at point B, the price movement at that time is downward. But if we look at what the RSI is doing for the same point in time, we can see that the oscillator is rising. So once again, that is a case of divergence. So that's the theory. Let's now look at some real charts using actual market prices to further demonstrate what we're talking about when we speak about divergence. Here is a daily chart of Starbucks. At the bottom of the screen, I have the RSI, and the settings I'm using are just the defaults. In other words, I'm working off the close, looking back over a 14-day period. I'm using candlesticks for my price charts. I find that a way of seeing with precision what has happened each day, but you could just as easily use a line chart or a bar chart instead, whatever you find works best for you to see the price action. Ultimately, it should all tell the same story. So we can see from June through to late July that Starbucks was rising in price. It was in an upwards trend. And that uptrend topped out here in late July, and then the price action was flat for a few weeks, and then the market reversed. Now, if we look at the RSI, we can see that when the price action was flat here, the RSI was falling. So we had flat price, falling RSI. What do we call that? Divergence. And of course, the RSI was also showing overbought here. So overbought plus divergence picks a reversal. This is a daily chart of Snapchat, and this is really just to show you that divergence is not that common a thing. If we look at the RSI at the bottom, we can see that by and large it's mimicking what the price action is doing. If we look at Snapchat going up here, we've got a rising RSI. When it drops here, we get a drop in the RSI, bounces back up here, sells off here, the RSI sells off, pushes up, comes down, pushes up. So the RSI by and large in agreement with the price. We do get a nice overbought signal here, and the market sold off after that. So it did pick a top quite nicely there, but there's no divergence to be seen on this chart. This is a daily chart of McDonald's, and this is similar to the Starbucks one. We can see how McDonald's is rising here in an upwards trend, and then the price action flattens out here in late summer, in August into September. But if we look at what the RSI is doing, whilst price is flat, we can see that the RSI is in decline. So we have got some divergence there, and that coincides with a top. In this and the previous two videos, we've looked at 3 different ways of interpreting the RSI, and they basically all have the same aim, namely signaling reversals. We've looked at overbought and oversold signals as indications of tops and bottoms. We've looked at failure swings as further indications of market reversals. And today we looked at divergence between price action and the RSI. Now, one idea is to try and put it all together as one unified way of using the RSI, whereby overbought and oversold signals would provide initial indications of possible tops and bottoms, and then you could filter these by looking for divergence, or maybe just strengthening your conviction when you see divergence, and then ultimately confirm the reversal signal by waiting for a failure swing. And so let's end with a final word in conclusion about the RSI. Having looked at all these different ways to use the indicator, the first thing to remember, and this is true for all technical indicators, is that it's not a magic bullet. Beginner traders often fall into a trap of assuming that the signals from an indicator will produce a correct signal all the time, and that simply isn't the case. Not only can signals be wrong, but they can often be wrong. The key to success is using a variety of methods to help you make good trading decisions. So if you end up using the RSI, its place will be as a supporting tool that helps to complement your charting analysis. Don't forget, Trading 212's app has a practice mode, so you can try out the RSI and find out if it helps your trading using virtual funds first. And then, if you're happy with what you're doing, you can think about integrating it into your real money trading or investing. Well, I hope you enjoyed this look at divergence and the RSI. If you did, please just take a second to hit the thumbs up button and give us a like. Why not leave a comment below? Do you use the RSI? How do you use it? What do you think about divergence? Let us know. We do read every message we receive. But that's all for now from me, Peter Martin, and Trading 212. Thank you for watching. I'll see you next time.